These boat buyers in the 2026 recreational boating market think they're getting the deal of a lifetime, but they're about to discover some expensive surprises that organizations like Boat US and the US Coast Guard warn about. The recreational boating market has shifted dramatically from the pandemic boom years, with pontoon sales crashing 19.5%, sterndrive boats down 20%, and jet boats plummeting up to 19% in rolling 12-month windows. But before you rush out to snag what looks like a bargain Brunswick-built bayliner, Yamaha-powered center console, or Mercury-equipped bass boat, there's something the industry doesn't want you to know about the real cost of boat ownership in 2026. Let me take you back to where this all started. In 2020, something unprecedented happened in the boating world. New boat sales hit a 13-year high, with nearly 320,000 units sold, a 13% jump from 2019. The pandemic had created a perfect storm of conditions: travel restrictions, leisure budgets with nowhere else to go, and Americans discovering the water in record numbers through NMMA's Discover Boating initiative. Here's what's truly remarkable about that boom. 415,000 first-time boat buyers entered the market in 2020. That's not a typo. About 31% of new boats sold from January to September went to people who had never owned a boat before, a 26% increase from 2019. Even more stunning, roughly 90% of 2020's sales increase came from these new boaters. For 3 years, this created what industry insiders now call the pandemic premium. Boats were selling for more than their original purchase price, even if they were 5 or 10 years old. Whether you were shopping for a Yamaha F350 outboard, Mercury Verado engine, or Suzuki-powered pontoon, scarcity ruled everything. Production delays at Brunswick Corporation and other manufacturers, exploding demand, and a complete loss of normal market reference points meant if you had a boat to sell, you basically had a license to print money. But that party's over. Frank Hugelmeyer, president of the National Marine Manufacturers Association, put it bluntly in January 2026. The mixed and uncertain economic environment that persisted throughout 2025 brought material impacts to the recreational boating market and a wait-and-see mindset for some boating consumers. The numbers tell the story. Through June 2025, new powerboat sales fell 9.7% compared to the same period in 2024. Looking at the rolling 12-month period, total retail powerboat sales declined 7.3%. The NMMA estimates 2025 ended with sales down 8% to 10%, dropping to approximately 215,002 units. But those are just the headline numbers. When you dig into specific boat categories, the picture gets much more dramatic. Pontoons, which the industry calls a foundation of the modern boating economy, showed surprising weakness with 2025 unit sales down 10.9% year-over-year. But here's the real shock. When measured in the April to April rolling window, pontoons crashed 19.5%. Jet boats dropped between 14% and 19%. Wake boats fell 9% to 14%. Sterndrive boats with Mercruiser engines? Down about 20%. These aren't minor corrections affecting just Mercury Marine or Yamaha Marine dealers. These are significant market shifts that represent real opportunities for buyers if you understand what you're walking into. The shift from seller's market to buyer's market has been dramatic. The Marine Retailers Association confirms that inventory has built up at dealerships, fundamentally shifting the balance of power. Many boats are now sitting on the market for 4 to 6 months before selling, sometimes longer. Average days on market increased to 573 days in the first quarter of 2025. This gives buyers something they haven't had in years: time. Time to revisit listings, arrange proper SAM-certified marine surveys or NAMS inspections, and gather quotes for upgrades or maintenance work. The impulsive buyer who drove up prices during the pandemic has been replaced by a more patient, value-conscious consumer who's demanding better bargains and isn't afraid to make lowball offers. In Southern California, 32 used powerboats over 30 feet sold in the fourth quarter of 2024 at an average price of $589,445, down 20% year-over-year. A 7 to 8-year-old Lagoon 42 catamaran that was selling for around 300,000 euros not long ago now sells for less than 250,000 euros, roughly a 17% drop. The average sold price for new boats fell 3.4% to $174,000, while used boat prices actually increased 4.2% to $211,500. That might seem contradictory, but it reflects something important. The market is becoming more selective. Quality boats are holding value better, while others are struggling to find buyers at any price. Industry analysts estimate that 30% of boats currently on the market will probably not find a buyer, even after several price reductions. That's not necessarily bad news for serious buyers. It means you have more choices and more leverage than you've had in years. But here's where we get to the catch that most buyers aren't prepared for. Lower purchase prices don't automatically mean lower total costs. In fact, the hidden expenses of boat ownership in 2026 might actually cost you more than during the boom years, despite cheaper sticker prices. Let's start with marine financing. During the pandemic, boat loans were cheap. Now, interest rates remain elevated, ranging from 5% to 15%, depending on your credit score and financial standing. That bargain boat still becomes expensive when you're paying high interest rates for 5 to 7 years. Insurance costs are rising across the board. The Swedish club implemented a 5% general rate increase for the 2025 to 2026 policy year. The American club announced a targeted 7% increase. Marine insurers are responding to increased claims costs and inflationary pressures that aren't going away. Your location matters enormously for meeting U.S. Coast Guard requirements and state boating registration fees. If you're in a hurricane-prone state, expect to pay 25% to 50% more in premiums. On average, boat insurance runs about 1% to 3% of your boat's current market value. But for high-risk vessels, it can hit 5%. For a $200,000 boat, that's $2,000 to $10,000 annually just for insurance. Then there's the maintenance reality check that follows ABYC standards. You can expect to spend 5% to 10% of a boat's value annually just to maintain it in the same condition. For a boat worth $320,000, that's $16,000 to $32,000 per year before any upgrades. New owners quickly discover that their boat generates ongoing expenses representing 10% to 20% of its value each year. Marina fees haven't gotten any cheaper. Many marinas charge by the foot, so a 40-foot boat at a marina charging $800 per foot with a seasonal multiplier could cost you $48,000 per year just for the slip. Even a modest 16-foot boat at $25 per foot monthly will run you $400 per month or $4,800 annually. Don't forget depreciation. A boat generally loses 20% to 30% of its value in the first year, then 10% to 15% annually in the following years. This slows down after 10 years to about 5% per year. But during those early ownership years, depreciation is eating your equity fast. If you're buying used, factor in survey costs. Hiring a SAM-certified marine surveyor in the Florida Keys costs about $35 per foot for a catamaran, plus a haul-out at $20 per foot. For a 38-foot boat, that's over $2,000 before engine surveys and oil analysis. With all costs considered, plus an average $4,500 yearly loan payment, You can expect to pay about $11,000 in your first year as a boat owner for a modest vessel. For larger boats, this number scales up quickly. But here's what's really driving the current market conditions. Consumer confidence has collapsed. The Conference Board Consumer Confidence Index fell 9.7 points in January 2026 to 84.5, its lowest level since May 2014. All 5 components of the index deteriorated simultaneously. Heather Long, chief economist at Navy Federal Credit Union, explains, "The dramatic drop in confidence is a direct result of the hiring recession. The fact that 2025 was the weakest year for job gains outside of a recession since 2003 is not going over well with the middle class. This creates an interesting paradox. Industry executives are actually becoming more optimistic. 40% now hold a positive 12-month outlook, up from 32% in the second quarter, and about 60% expect their company's revenue to grow. But consumers feel the opposite. Roughly 60% of consumers expect economic conditions to worsen." The NMMA notes this divergence. The divergent sentiment between consumers and industry is not a battle between optimism and pessimism. It is a reminder that the same economy looks different depending on where you sit. For boat buyers, this means opportunity if you understand the landscape. Dealers need to move inventory. Manufacturers are offering incentives. Private sellers are motivated. But you need to approach this market with your eyes wide open about the total cost of ownership. The smart play in 2026 isn't necessarily buying the cheapest boat you can find. It's buying the right boat for your actual usage patterns and budget, factoring in all the ongoing costs that many first-time buyers discovered the hard way during the pandemic boom. Interestingly, the top of the market has defied gravity. Yacht sales were actually up 1.8%. Affluent shoppers continue to browse and buy premium motor yachts because they're more insulated from economic fluctuations. If you're shopping in this segment, you have different considerations than the average recreational boater. The recreational boating market is also seeing growing demand for shared access models. Freedom Boat Club memberships, carefree boat club participation, peer-to-peer rentals, and charter options. For many people, these alternatives make more financial sense than ownership, especially when you factor in storage, maintenance, and insurance costs. Looking ahead to 2026, the NMMA expects continued mixed economic conditions, with new powerboat sales roughly on par with 2025, possibly slightly up. Some experts are cautiously optimistic about a modest recovery in the latter half of 2026, but that recovery depends heavily on broader economic conditions improving. So yes, there are deals to be had in the 2026 boat market. Inventory is high, seller motivation is strong, and buyers have more negotiating power than they've had since before the pandemic. But the catch is real. Lower purchase prices don't automatically translate to lower ownership costs. If you're serious about buying a boat in 2026, do your homework on the total cost of ownership. Budget not just for the purchase price, but for insurance, maintenance, marina fees, fuel, and depreciation. Factor in your local market conditions, U.S. Coast Guard requirements, and seasonal usage patterns. The pandemic created a lot of boat owners who weren't prepared for the reality of ownership costs. Don't become one of them. The deals are out there, but only for buyers who understand what they're really signing up for. The market has shifted in your favor. Use that advantage wisely.